In this video, we're going to be taking a look at the trades that I took this week using liquidity, supply, and demand, and why this strategy prints money. Let's first start out with the first trade I took this week, which was on gold. So first, let's start out looking at the higher time frame on gold. Coming into Wednesday, the higher time frame was very bullish because gold had some fundamental themes moving it. I saw that we moved past this heavy area of resistance and broke out of this entire range we had right here, especially this tight range we had in this area. Wednesday was also CPI, so I knew that it would be a lot more volatility. After looking at my higher time frame and my directional analysis, I then went to the lower time frames and marked off areas of liquidity. So first we have Asia, which was in a somewhat consolidation, and then London as well, which was in a more of a consolidation too. I mainly trade New York, so I'm waiting for New York to see what it will do. So after I marked off both my liquidity areas, next I'm looking for supply and demand zones. If I go on the 1 hour time frame, we can see that there is a demand zone right here. This last doji was red on side of top step, so I counted it as a demand zone. Another important key factor inside of all of this is this small area right here. Between this wick and this other wick, there is a gap. And what do we see later on? Price taps into this gap. So then New York opens and this 715 candlestick is right before CPI. So we sweep the lows and then we tap in. Next thing I look for is entry confirmation, which is a break of candlestick. Now I do have a free Discord. We are doing a giveaway once we reach 1,000 members of a prize worth of $500. To increase your odds, just make sure you subscribe to our YouTube channel, leave a like and comment. Our overall Discord community, we just give out free signals, and it's also a place where you can share trades and analysis as well, just talk and learn from one another as well. So if that all sounds cool, the Discord link is inside the description, and let's get back to the video. Stop loss goes right under this candlestick right there, and aiming for a 1 to actually 5, but taking partials along the way. So I actually took a partial at London high, but when I moved my trade to break even, this candlestick wicked back down, tapped me out, and move forward. Usually I take partials at levels of liquidity because, as you can see, we see that as soon as we took out London high, sellers immediately hopped in. There was also a setup that I got into the next day, which was on US 30. So let's go over the same process that we did for gold. First thing I look for is the higher time frame. The higher time frame was bearish for a lot of reasons. Number one, the CEO of that health company had gotten murdered. So the shares of that stock had gone down, pulling the Dow downwards, plus fundamental news as well, giving us a very good skew. That, along with PPI coming out on this day, provided with good opportunity to get inside of the markets. Now that we have our higher time frame analysis, let's go to the lower time frame and mark off our levels of liquidity. So we have our Asia high marked off and also our London high marked off, and we wait until price sweeps London high inside of New York. We have already swept above Asia high, so we can see right here there was a clean rejection showing a lot of sellers coming in, but it wasn't strong enough to push the price all the way down to sweep Asia low yet. So then news comes out and then we push above into what? We go to our higher time frame. On the 4 hour, there is a clean supply zone that we are pushing into that broke structure as well and has a gap. Adding all of these confluences as well, now we just wait for the break of the candlestick. Here I waited for the break of the body because I wanted a tighter stop. I don't like stops that are like 80 pips. At that point, it's like might as well swing trade. The highest I go for my stops is like 50 points. That's as far as I'll go. After that, we get break straight. This candlestick was just pure selling. We take out London low. After that, I move my stop to break even, take a quick partial. But then we end up coming back to break even before taking out Asia low, tapping me out. Now I could have waited until we took out Asia low before moving to break even and taking a partial, but sometimes you just want to take a partial more quicker. It really all depends, but this trade went absolutely nuts, and it is still actually going on right now. As you see, it went for almost a whole 147, and technically you could still be inside of this trade right now, floating in profits and just moving your stop loss and trailing stops as well. So it was a very beautiful trade. Hope to catch more trades like this going into the coming week. So those are the two trades that I took on futures this week. Liquidity, supply and demand. It's basically like a very high probability model. Doesn't happen every single day, but when it does happen and you wait for the right entry confluences on the right side of the market, you have a catalyst as well moving the market. It's basically a very easy setup to catch trades. So that's it for this video. Hope you guys enjoyed. If you have any questions, comment down below and I'll make sure to get back to you. And I'll see you guys next time.